Good day everyone, Ali is here from Safi Financial Network. Today is February 26, 2022. We are going to analyze the market. We had very nice comeback from the market just last 2 days of the week as geopolitical tensions are getting into a new era. Russia invaded Ukraine. Ukraine is kind of like they are defending themselves because it is their territory and no one can invade them. And it is obvious that everyone is coming back to support Ukraine at this time. And we are not getting into the geopolitical issues or political matters, but obviously these tensions are going to impact the market. And I'm not going to take Ukraine side or Russia side, but I just want to take the human side. And the only thing that I can say is God bless everyone, especially in Ukraine territory. They're dealing with a hard time. War is not easy for everyone, especially in this unfair situation when just another country attacking to the other one and just killing people for their interest. It's not acceptable in any kind if you want to slice it and dice it. All right, so let's go to the chart. Here is the SPY, which is ETF for S&P 500, and I just want to show you a pretty interesting thing that I just working on these things. As you know, some of you know, this is the cycle for the market. We have like a long-term cycle, short-term cycle, and as you see here in 2002, October 2002, all the major cycles from the long-term to the short-term cycles bottoming here. And after that, when we have like all the cycles coming together, alonging together, and congested in one area, and form the bottoming case, then you should expect prices moving back up to the rally. And as you see here, we have in 2002 October all the cycles coming back down here, and when prices forming the bottoming formation going off to the rally all the way to 2008. And 2008 here is the 2009 again. So most of the cycles, especially this bigger one, along with the other cycles. By the way, there are 6 cycles are showing in this chart, and all of them are forming the bottom here, and it's congested here, so we are getting back to the rally. So you see like a correction is coming just because these short-term cycles are forming the bottom or showing the bottom, but the long-term cycles are going higher. This one is going higher, so that's why price is going higher as well. If you move again a little bit higher, as you see in 2000, I believe 15, yes. So here is the 2015 August. Again, cycles are coming down, especially this bigger one. When I'm just concerning about these bigger ones, these two especially. So when these two are coming down or sloping down, I should expect market is going to have a massive or kind of like a sizable correction or even recession, right? So especially when these two are coming together. In this case, just the bigger one is going to form the bottom, so this one is forming the top, so that's why they are not coming along together. But this one was strong enough because it's kind of like coming along with the other short-term cycles. And as you see here is the choppy consolidation for almost a year, like the whole entire 2015 and 16. Market didn't go anywhere. It's just a consolidating, just because all the cycles are coming together, kind of mixing, giving us a mixing signal, and that's why market didn't go anywhere. It doesn't go down, it doesn't go up. Cycles are kind of like a mixing together, but the bigger one is going down. Plus the short-term cycles are kind of forming the bottom. At least we know if we are finished the correction, we are getting back to the rally, and cycles actually didn't lie to us, and we get back to the rally just because this bigger one is start moving higher and higher and higher and higher Right now here is 2018. As you see, short-term cycles are forming the bottom along with this intermediate cycle showing us the bottom just early. And as you see, when we come up with a conclusion, we should expect another sizable correction. And here's the choppy and sloppy market almost for 2 years, right? And here's the COVID crash. So these two cycles, bigger cycles, are showing us the market is peaked, the market is topped. This one is sloping down, this one is getting close to the top, and these short-term cycles, especially this one, giving us the bottom. Just these two are giving us the bottom earlier. And when there is a top, always we should be careful of a sizable correction. In this case, it was a flash crash, like look at that. So it was like a silly crash, goes all the way down, take out this pivot low, but a week after, 2 weeks after, we are just coming back above this low. So any time that we are taking a major important support, but we are coming back above this right away, this is bullish signal, especially when cycles are helping us to understand how market is going. And in this case, we have a very nice rebound going all the way up to here. And again, there were some choppiness and some corrections. As you see here, short-term cycles are showing us, especially here. So look at that, especially here in early 2000, not early, September 2021. I remember I just posted in channel, hey guys, just be careful because we are showing market, a parabolic market into the chart, and we are expecting prices going down just because three of my cycles, and I just came up with different reasons as well, but market is going down to have like a correction. And there you go, we have a very nice correction. Almost it took 2 months, forming the bottom in October and then going off to the rally to December 2021. And December 2021, again, if you look at that here, so we have lots of cycles. Just zoom in a little bit, especially the bigger one. I'm just concerned about the green one, especially green one coming along with these short-term cycles. Also, at this time, this blue one or cyan one sloping down. So when it's sloping down and these ones are showing us the correction, we are into a very important sizable correction as we are expecting, right? But the good news is this one, which is green one, is forming the bottom. Let's just give me a second. Okay, so this one is giving me a bottom formation, and when the correction is due, as you see, there are 1, 2, 3, 3 cycles are showing we are having a correction, and that one of them is the bigger one, which is very important. So this gives me a correction, a sizable correction, as you see here. And there is another one I'm just expecting, just because this one here is the equinox. Equinox is in March 22, which is very important date. As you know, it's kind of like a reversal for the market, as COVID crash reversed on the equinox 2020 if we double check the date. So again, there are a couple of cycles coming back down, like 1, 2, 3, 4 cycles are coming back down in September, August this year, which is this pink line or pink area, I should say. But before that, just give me a second, I'm gonna adjust it. But before that, I'm expecting prices kind of settled here. I'm not sure if we are taking, if we are going to another low and take out this pivot, or we are going to higher, just because cycles are kind of mixed. But the bigger picture, especially this green one, is going higher. This cyan one is going down. So we are kind of like taking mixed signals from these two bigger cycles. But the short-term cycles, some of them are bottomed here. So when two of them are bottom here, two of them are picked. So again, we should expect a choppy, sloppy market going forward. Even if we go higher, I'm really concerned about this summer, because this summertime, probably that would be end of the bull market, to be honest. This summertime. Again, we should look at the price action. We should look at everything. But from July to October, I'm kind of like a concern about the market, just because the cycles are showing very negative ones. Okay, so let's go to the price action chart, see what price action tells us. Okay, here's the S&P 500 weekly chart. And as you see here, last week, if you remember, last week I told you exactly, hey guys, just look at 41.25. 41.25, and this area is a very major pivot. And look what happened to the market. Market goes down, take out this low nominally, and goes to another lower low. But how rebound market to the upside? Like, it closes above this. So everyone is talking about the head and shoulder. Like, here's the shoulder, here's the head, here's the shoulder. But when we are going down to trigger head and shoulder, we are rebounding back up again. So still we are into danger zone. I'm not gonna rule that one out, but based on the price action that I see, market has a very phenomenal rebound last week. So this weekly chart is still bullish based on the price action, but we need to see a follow through next week, especially next week. Follow through. We need to go back above this SMA 50 on the weekly chart. All right. So if you go to the monthly chart, I'm going to show you the monthly chart. Here's the area that I told you exactly, 41.25. We have a couple of Fibonacci levels here just coming along together. So that's what I told you exactly. This level is very important. If we take this one out, we are going to this level, which is 3,970 immediately. But we didn't go that far down. We just tested this 41.25, and then we are going back up. And here's the weekly chart again, so 41.25. And momentum is very bearish on the MACD, so it's kind of like forming the bottom. Stochastic momentum index is giving me the bottom as well. Just prior Friday, it was down there into oversold area, which just happened in COVID crash, and then forming the bottom and then going up. But we are kind of in this situation. So as you see here, this is the correction, this is the correction, and this correction was not that easy. We're going up and then coming back up, testing this low and then going up. But now we are taking out this pivot low here. Just give me a second. Yeah, taking out this pivot low here. We're going down, take out the low. We just hit the nominal low, coming back up above these pivots, which is very bullish, by the way, which is very bullish. But there is no moving average to support this one, so that's why I'm a little bit concerned about if this one holds a lot or not. There are two camps right now. One is bullish camp, the other one is bearish camp. And bearish camp, I'm gonna get to the sentiment as well. They are very loud now. So here is my channel. As you see, here is my Telegram channel, and as you see, I just posted the sentiment there. A sentiment for the market is very bearish. So last week we ended up to 53% of people are bearish, and this is for week ending up to the February 23rd, and this is the most bearish reading since last year. Like 1 year bearish high is 53%, and the only thing is, when 53% are bearish, we are also going down level to this one, like 22 or almost 23% are neutral. If you just combine these two, so 23 plus 53, that ended up to 76% of people. They are not bullish. At least 24% are bullish, and this is how sentiment works. When sentiment is very bearish, we are pretty close to the bottom. I know I'm telling you this for a long time, but market is dealing with lots of geopolitical issues, and when sentiment is low, my cycle shows we are at low, so we should expect a price is coming back up, not in a strong way, but at least we can say there is a bull case in this case. And here is another indicator, which is fear and greed indicator. And as you see here, when we are every single time when we are getting close to the 20, which is pretty extreme fear, right? So this is extreme fear. And when every single time, like for almost the last 4 months, we are hitting four times. Seems like a sentiment in market is very bullish. Bearish. They're not bullish at all. So everyone expecting prices going lower. Now bullish, not bearish people are getting more and more into the market. So when the lots of bearish people are, the number of bearish people are going to go higher, seems like the bottom is very close, and we should expect the prices going back up to the upside again based on the sentiment, not the price action. All right, so here is the chart again. So we have a nice hammer. This is one of the biggest reversal that I've ever seen. The last time we saw such a this price action, if you go back, just want to show you something pretty interesting. Here is the September 2015. As you see, we are showing a W formation. So price is going down to test this area and to take out this pivot. Everyone got the bearish case. What was the catalyst on that time? So Federal Reserve came up and said we are going to increase the rate. So on that year, Federal Reserve interest rate was, I think it was like a 0.25 or something, but they increased rate to 2% by end of 2020. And look what happened to the market. So Federal Reserve increased the rate, market goes higher, start to tightening more, market again goes, market just react first, double bottom, and then nominal high, and then going down again. This is like a war, and then going up again. Just as you see, when Federal Reserve start to going higher and higher in interest rate, market doesn't go down in one night. It goes like probably it's going to digest what's the reason for the rate hike, and how value stocks are going higher and how the other sectors are going down. So market start to digesting of the impact of the rate hike. So here is in 2015, as you see, Federal Reserve start to say we are going to increase the rate, and this is the election night, and after that, after election night, we can see the price is going higher and higher, right? So this is a W formation based on the price action, and here is the W formation again. I'm expecting price, we can see something like this. So anytime that we are seeing, everyone again was talking about this is like a shoulder, this is head, and this is a right shoulder. We are taking down this low, but look at that, how it falls, right? So another head and shoulder pattern was happening in 2011, and here is 2009. This is like a shoulder, this is a head, and this is a right shoulder, and this one is going down again. Triggers, look at that. I just want to point out lots of head and shoulders fell into the market just because market didn't respect this pattern, right? So just not by looking the price action, just this is because this is head and shoulder, it doesn't mean that it's going to trigger, right? So it's there are lots of the other factors that you should consider as well. And here is another head and shoulder that everyone is talking. Here's the shoulder, here's the head, and here's the shoulder. But as you see here, we have this stochastic momentum in bearish, bullish reversal. Bullish reversal. Momentum in MACD is pretty low. RSI is in a very low in the weekly chart. So this gives me plus the sentiment plus the cycles, this gives me, okay, we are pretty close to the bottom. And look at that, this is daily chart by S&P 500, and we have a crossover. We have nice rally, and this is the area that I was pointing out. We have nice rally. However, there are just give me okay. So if we are taking like 1, 2, and 3, 4, and then 5. So this is 5-phase structure of the correction is complete, but we need to have confirmation. So this is the short-term trend, which we have like a breaking above this short-term trend. And there is another trend, which if I'm gonna show you here. So this is the trend line, and we should expect prices going back up above this if we are bullish. If we are bullish, we should wait, see if price is backing up here. So we have lots of resistance here. Here is the wide range bar. This is very bearish. Here is the pivot, and we are getting close to this pivot. And here are moving averages just coming together. So we have 21 EMA, 20 SMA, 200 SMA, 42 EMA. Lots of resistance are going to be here, especially applies this one. So these two candles are pretty bearish, right? So here is the pivot, here's the breakdown, scene of crime, here's the pivot, here's the breakdown, scene of crime. So market is going up to here. Probably by end of Monday or Tuesday, we can expect prices going there and see that there is a rejection from this area. So we should wait and see if we're breaking out of this level. Then we can make a case that this W pattern is valid. And also look at that. Here is the RSI. RSI, we have a very nice divergence. We are going to the lower low in price, but RSI is giving us higher low. Stochastic gives us higher low. MACD gives us higher low. So when we have 3 indicators showing a divergence, at least we should expect prices going back up here. Maximum target that I have for now is 44.36, which is a 20 SMA coming along with wide range bar and coming along with this trend line, and we should see what is going on after. If after this we are just breaking above this trend line like this and not like that, just because it fails, right? So when we break above this one, fails and fail pattern speed up the price going to the downside, right? So we should go above this trend line, stays there, consolidates, or stays there above this, at least one pullback and test, and then going back up to see if price wants to go up another time. All right, so let's go to here's the Nasdaq. Nasdaq, again, the same thing. Here's the daily chart for Nasdaq. As you see, we are getting close to the same scenario. So here is the trend line. Here we are pretty close to the trend line. 14,434 is going to be resistance area. So I'm expecting price kind of like reacting to these levels, just because we have two wide range bar reacting to these levels, and we should expect to see if there is any bullish case, then price needs to go break up. If there is a bearish case, price needs to coming back down. But here is this, again, stochastic, RSI, MACD. All of them are showing very nice bullish divergence, nice bullish reversal. But again, we should expect breakout above, at least above SMA 20 on the daily chart, and it stays above it. If it stays above it, then we can make a case for a bullish run. Okay, so let's go to Dow Jones Industrials, just because Dow Jones is very important as well. So there are lots of financials and energy in Dow Jones Industrial. As you see, Dow Jones have better performance from the other indexes. Just compared to the other indexes, Dow Jones have better performance, and the only they come down like a 12%, 12.80% down, and then what a reversal. This is a very nice dragonfly doji, and after that a bullish case we can make. And this is a very nice bullish case, just because it engulfs 1, 2, 3, 4, and then 5 candle, like a 5 candles prior this one. It just engulfing. So this could be a major pivot, and this major pivot is very, very interesting, just because this one coming along with, again, a divergence in MACD, divergence, bullish divergence in RSI and stochastic. And also if you go to a weekly chart, and here's the weekly chart, this is the trend line, and this is the area that I showed last week. I didn't move them, it just it was there for a week, and I told you guys exactly how price can react to this trend line pivot. Here's the pivot, and then back test going off to the rally, back test to this pivot right there. So we are taking out this one, taking out all the stop losses below this, and then coming back up again. This is the wide range bar, this is the candle, breakout candle, or scene of crime that we can call, and this scene of crime gives us good confidence that we have a good reversal here. But still, it is early. We can't make a case of the bullish run until we are getting close above 50-day SMA and 20 SMA, and so we should wait for that one as well. All right. The next index is Russell. Russell came down almost 23% off the high, and as you see, still this let me just going down there, let me just take out this Fibonacci. All right, so this is very, very important for the Russell, that if we are getting close above this, we took just slightly going down below this pivot and then reversing back up. Russell has a very, very good chance to have better performance in rally, just because this W pattern is very, very nice for Russell, and also stochastic, also RSI, and look at the divergence in MACD. So we have lower low in price, but look at the higher low in MACD. So the low is here for MACD, but the next low is up there. So Russell has a better performance in reversal, especially it closes above EMA 21 and SMA 20, which is very, very important for Russell. But Russell did it twice before, but fell going down. But this time seems like, along with the other indexes, it can go higher as well. So look at this SMA 50 in daily chart, and also this trend line. If we close above this and close above this trend line, so Russell can go all the way up to this pivot, to this scene of crime here, which is a 2192 or 2200, which is a pretty important level for the Russell, and we can just take a look at it after if we get there. But for now, 2100, and this trend line is very, very major resistance, and we should take out this pivot and take out this trend line and SMA and hold above it. All right. Okay, so hope you enjoyed this video. If you enjoyed this video, please give us a thumbs up. Subscribe to our channel for making this video. There are lots of time just I'm consuming and spending on it, so please just give us support with subscription, or if you have any comments, please just put your comments down there in the chat box. I'm gonna reply back ASAP. Have a wonderful weekend. See you everyone on the chart. Bye bye.